the connection between economic crisis and cryptocurrency. Out of all the mainstream hysteria about crypto that we have heard in 2017, one question of the utmost importance often goes unasked: why now? And what is happening to fiat currency? Bitcoin has existed since 2009. There have been many ups and downs between then and now, but nothing like what 2017 brought. The total market cap of all coins came in at under 10 billion USD for most of that time. Today it is over $500 billion, and will almost definitely exceed the $1 trillion mark sometime in 2018. So, what has caused this massive explosion? Has it just been a result of more media coverage leading to greater awareness? Or is the whole thing a fraud, as some banker types would like the world to believe? The reasons are legion. One can't necessarily pinpoint any exact causal factor. Reality is often more complex, involving many variables. That being said, sometimes a single variable stands out above the rest, as having a massively more significant influence than everything else combined. The inevitable and predictable devaluation of fiat currency. The rise of cryptocurrency is not surprising to those who understand both the basics of the technology and elementary economics. It is simply the result of fiat currencies collapsing against the fixed supply of cryptographic coins. This is happening to the world as a whole. Yet it is happening in some places faster than others. In a moment, we will zero in on Venezuela, a country where the reality of all this has become painfully apparent. Paradigm shift. One of the few prominent people with a voice in mainstream media who understand this concept is cybersecurity expert John McAfee. He has a way of expressing the simplicity and significance of the crypto revolution. It is a good thing to have someone like him making public statements to counter those of bankers, regulators, and Jim Cramerists. In August, McAfee wrote a piece for Business Insider, in which he compares the invention of Bitcoin and blockchain technology to the invention of agriculture. Yes, agriculture. McAfee makes a rather compelling case. Before the invention of agriculture, he notes, people thought only of how to most efficiently move from place to place as they depleted natural resources. But with agriculture, the people stopped moving. They could now remain in a fixed location indefinitely. The consequences of this were undoubtedly difficult for some to comprehend in the beginning, just as people struggle to understand what is happening to fiat currency right now. The result was a complete and total paradigm shift. Likewise, what people see as a Bitcoin bubble from the perspective of the new paradigm is merely the predictable and systematic devaluation of fiat currencies that will continue, with obvious ups and downs, until all fiat currencies reach the 0 point. As the relative value of Bitcoin temporarily drops, they will point to this as proof of their understanding. It won't matter. The reality is this new world is what it is. Those who understand will be the leaders of this new world. An understanding of sadness. No one understands all of this better than citizens of Venezuela. Venezuela is in the midst of a horrific economic collapse. The Venezuelan bolivar has entered a hyperinflationary death spiral, as every fiat currency does at some point. The following charts serve as a helpful visual demonstration of this crisis. Here we see the value of the Venezuelan bolivar relative to the world's reserve currency, the US dollar. The inverse of the bolivar's relative value is the rate of inflation. And finally, take a look at the weekly local Bitcoin's volume chart in Venezuela courtesy of CoinDance. It is clear that people in Venezuela are not using Bitcoin as a speculative investment, or even as an attempt to establish a new decentralized monetary system. Their motivation comes down to survival. As the Washington Post reports in a recent piece entitled "How Hyperinflation Stole Christmas in Venezuela," a pair of imitation Converse sneakers costs $500,000 of the local fiat currency this year. They were the cheapest in the store, but the Converse knockoffs were still 500,000 bolivars a pair. "Son locos they re crazy," Viviana Acosta had said, gingerly placing the sneakers back on the shelf. Just before Christmas, the world's worst inflation crisis in nearly a decade was escalating, bringing a country of nearly 32 million, once Latin America's richest per capita, to its knees. Shoes for the kids had been Viviana's plan for the holidays. But multiply by 3 for 2 daughters and 1 son, and it was 3 months' worth of what she earned doing house call, hair and nails. Those unfamiliar with the crisis in Venezuela may find it worthwhile to research the topic to the extent they can. It serves as a ghost of Christmas future for what will soon be occurring in all nations dominated by central bank-issued debt-based fiat currency. But the world need not despair. Satoshi Nakamoto is like Santa on steroids. Cryptocurrency offers an alternative to the oppressive fiat currency system set up by central banks. Many other countries face similar crises. Just take a look at this list of 25 countries that have experienced hyperinflation in the last 25 years, courtesy of Money.com. Crises like these have been the biggest factor fueling the fanatical rise in crypto market caps. Of course, mining for coins after a fiat currency collapse is not ideal. If we switch to crypto as a collective beforehand, we can escape the fate of Venezuela and the dozens of other nations that have experienced similar crises in recent years. In short, listen to the ghost of Christmas future. Central bank, fractional reserve, fiat currency is on the way out. Start using cryptocurrency as both a store of value and medium of exchange, while you still can. Cryptocurrency's correct price targets for buying the dip. Investor psychology is such that everyone wants to wait for a correction, and then when it happens, they are too scared to buy. Remember to be greedy when others are fearful. The following is a portion of a trade alert recently sent to premium members. The entire cryptocurrency sector has corrected sharply today. I believe prices had become overheated, and this correction is healthy for the long-term bull market in cryptocurrencies. I think this will be another routine correction, and not the start of a new bear market. The average correction of Bitcoin this year has been 30%, and occurred roughly once per quarter. Thus, I believe we can look at price levels that are 30% lower than the recent highs as good entry points. I also look to the 50% Fibonacci retracement level as a potential bottom during corrections such as this. This is a 50% retracement of the latest major bull run higher. And in this case, the 30% correction and 50% retracement coincide rather well. Bitcoin crashed from a high of around $19,500 to a low of $13,500. It has since rebounded to $14,000 as I compose this alert. A 30% correction from $19,500 puts the price at $13,650. A 50% retracement of the move from $7,500 to $19,500, $12,000/2 equals $6,000, is also $13,500. Thus, I think the odds are good that $13,500 ends up being the bottom of the current correction in the Bitcoin price. Of course, this is not an exact science, and there is no guarantee with technical analysis. But I am starting to add at this price level, and will keep some additional powder dry should the price continue lower. The Bitcoin price corrected from a high around $875 to a low of $650 today, before bouncing back toward $700. A 30% correction is $612, and a 25% correction is around $650. A 50% retracement of the December advance also puts the price at around $650. I will start adding to my Bitcoin position around $650 and keep some powder dry should the price continue lower. I believe there is a good chance that the price will bottom around this level and find support. Litecoin has corrected from $375 to $250 today. It bounced around $250 and is currently trading around $275. A 30% correction from the high puts the price at $260, which again roughly coincides with a 50% retracement. I will add to my position in Litecoin on a drop to $260 and continue adding if the price drops to $250 or lower. I remain very bullish on Litecoin and believe it is undervalued on an absolute basis and relative to Bitcoin. There have been recent rumors that Facebook may integrate Litecoin payments on their platform. There is no way to confirm this, so take this chatter with a grain of salt. But it would be huge for Litecoin and likely send the price rocketing higher if an announcement is made. I think that the BTC to LTC ratio made up to 10 during 2018. At the current Bitcoin price, this would imply a Litecoin price of $1,500 or roughly 5x the current price. Of course, as the Bitcoin price rises, so does our target price for Litecoin. Altcoins have also corrected sharply today, after becoming very overheated this past week. We have seen some ridiculous valuations for companies that do not even have a functioning network or product. The hype has reached a fever pitch reminiscent of the dot-com bubble era, so I am actually happy to see altcoins correct sharply. I believe this is good for the long-term sustainability of these coins to rise at a more moderate pace. I may look to add one or more of the coins on our watch list during this correction. These potential additions include: please subscribe to view our top cryptocurrency picks. It can be difficult to buy during significant corrections. Fear is a very powerful emotion, and investor psychology is such that we are more comfortable buying near all-time highs than during big dips. But history has proven that it is significantly more profitable to be a contrarian, go against the herd, and buy when others are panic selling. Of course, there is always the risk of catching a falling knife. But I believe the cryptocurrency bull market is still in the early innings, and we are using as much information as possible to determine potential bottoms. We are also buying in tranches here, and keeping some cash on the sidelines should the current correction have greater magnitude than prior corrections. I am in the process of reviewing a number of new ICOs this week, and should have final ratings by end of day tomorrow. The ICOs that we rated as a buy during 2017 are up an average of nearly 400%. Most of those coins have only been trading a few months since being listed on exchanges,